Happy Tuesday, everybody. Austin at Homeowners Financial. And one of the questions we've been getting is, how does your credit score impact your mortgage? There's really two different pillars. The first pillar is program. The second is price. So price is what you think of normally, right? Oh, if my credit score is lower, I might have a higher interest rate. If it's higher, I should have a lower interest rate. And that is certainly a true story. That'll certainly impact things. Now, 760 is really the highest tier from credit. So it can impact your mortgage interest rate and your mortgage insurance premium if we're doing mortgage insurance, okay? So that's the price side of things, and they break every 20 points. 760, 740, 720, 700. Now that break doesn't necessarily mean that, say, between a 700 and a 760 credit score, your rate's a point difference. You might have it on the cost perspective. So instead of a 0-point loan at 4.5%, maybe it costs at a 700 credit score half a point to get that 4.5%, where it's 0 at a 760 tier. So when we're talking again about our credit score on the price side of it, it's going to drive it every 20-point increments. And it may depend on the points that we pay versus just the interest rate. Now let's switch over to the program side, and that's more impactful. The program side is where you qualify. Different programs have different minimum credit scores. For example, if we're doing a jumbo loan, a loan over 783, 150, oh, it's such a weird number, in Santa Barbara County, that jumbo loan might have a 700 minimum requirement. It might have a 720 requirement. There's certainly some with 680, but below 680, we're not going to see as much availability. Flipping over to maybe FHA. Now, FHA technically doesn't have a minimum credit score, but the folks that buy FHA loans, those investors, they really want a 580 or a 620 or a 640. And that's the same for VA. VA itself doesn't have a minimum credit score, but the folks that buy the loans, the people that actually supply the money, because the VA and FHA, they insure the loans. They don't buy the loans, right? So when we're talking about your credit score, it's two different pillars. The price definitely is a factor, and that breaks every 20 points, but it's the program availability as well. Maybe it's if we're doing a first and second mortgage, and that second mortgage have a 700 minimum credit score. Maybe it's 680, maybe it's 720. You hear me say 680, 700, 720. These are main tier breaks, okay? So if you're talking about your credit score overall, I highly suggest check out the credit class that I've done on this. 2 different routes, giving you different backgrounds. What's it look for co-signing? How do you improve your credit? There's a lot of resources on this page. I want you to have as much information as possible. Please let me know any other questions I can do to help. It's Austin at Homeowners Financial. Make it a great day.